Hello, I wanted to talk a little bit more about GDP. We need to make some adjustments to it to make it a better measure. Now, before I spoke about GDP, you can look at that whole talk here in this link. Here I talked about why it isn't a particularly good measure. It doesn't really capture what we want it to capture. This is true even after we make these adjustments, but let's talk a little bit about these adjustments. Okay, a lot of times we look at nominal GDP numbers, but it really doesn't tell us that much unless we adjust it for inflation. It makes comparisons across time and change more meaningful. If we do that, we'll get a chart that looks something like this. Obviously, with positive inflation, that's going to change the slope of the GDP line. It's going to make that a little bit flatter, which makes sense. Now, I have spoken about inflation at length. You can follow these videos here. I think they're well worth looking into. You're going to find that our perception where that line is probably even flatter makes sense if you follow these links here, but we do need to make that adjustment for inflation at a minimum. The other thing we want to think about is adjusting for population. So as the number of people grow, then the GDP again line would flatten. So if we see places like the U.S., India, etc., the per capita adjustment makes that line slope less. Places like China, where the population is actually starting to decline, then that improves it. But we ought to think about it on a per person basis. That's what we really care about. If the population doubles and GDP only goes up by 25%, it's not a very attractive thing. Now, let's go back and look at GDP again. So we have what GDP is. It is consumer spending. It is government outlays, which is spending. It is gross investments, which again is putting capital work by spending on projects and equipment, et cetera. And then it is kind of this net export. So out of all of these things, it's all spending except for this net export. But in general, it's GDP is spending. That's what we're measuring here. But spending isn't all equal. So if you think about spending, you could, let's say you're going to spend $100. Now, you could earn $100 and then spend that $100, or you could borrow that $100 and then spend that $100. They're not the same thing. You have to pay that back, right? So if you think about government outlays in terms of increasing the debt to pay for those outlays, it isn't the same. And what we should be doing is we should be adjusting the GDP numbers for this net borrowing, because really that's money that we ultimately have to pay back. We're spending today, but it's at the cost of the future. So here's a chart where we kind of attempt to do this. So we back out this net public debt here. If you look at that yellow line, we're calling this the real structural per capita GDP, to give us a better picture of what's going on. And you can see in this chart, it's a little bit old, but you can see that we had this 10 plus year period of time where it didn't really change on a per capita basis adjusted for this debt. Now, I would argue that we also should be adjusting for private debt. I don't have a chart that does that, but if you think about it, if you're borrowing money for a project, so you're borrowing at 5%, but you're able to earn a return of 7%, then that's net positive for society. But if you're borrowing it at 5% and you're earning nothing on it, then that would be a net negative for society. So we should also be making the appropriate adjustments for all debt, really, but for private debt too. I don't have a chart that does that, but we want to think about this. It does make GDP a better measure to have this, real inflation adjusted, per capita, population adjusted, and debt adjusted number. It makes it better. But again, the underlying problems of GDP, and it's specifically its lack of granularity, make it not a particularly interesting measure. We should continue to do it, but we really need to get better at well-being and what the average person looks like. Thanks so much for listening.